dig in on, for example, M&A, hopes around this new administration coming in 2025 and deals getting done, chips being supported or not supported as a sector. What do you make of it?
Well, let's start with M&A first, and we do think that M&A will increase. You have pretty rigorous merger guidelines passed by President Biden in 2023. We reckon those will be undone under President-elect Trump. And remember, they had lowered the guidance threshold at a company being seen as anti-competitive. So we do think it's going to be a friendlier environment for regulation, a friendlier environment for M&A, and expect that animal spirits, M&A, and IPOs will pick up in 2025. So we think this is one of the positives coming from Trump. Just quickly on the CHIPS Act and Intel, are we back in the wrong horse there? This is supposed to create jobs. They just laid off 15% of the workforce. And I kind of look at it and think NVIDIA didn't get any money from the CHIPS Act. And it's actually doing a pretty darn good job of actually supplying the chips industry. So I think this is a program. It's hard to change and remove these legislative programs. It's not a program that President-elect Trump favors very much. I think he called it a really bad program.
Yeah.
So stay tuned.
On NVIDIA, though, they basically get TSMC and other chip makers to produce. This is all about onshoring and making sure that chips can be made in the United States. When you're looking at NVIDIA and indeed its exposure, whether it be selling into China or indeed depending on a supply chain that is in many ways related to Taiwan, how does that factor into an investment thesis?
Well, as you know, Trump has said tariff's the most beautiful word in the English language. So, maybe Trump just used some tariffs here on TSMC because that would encourage them to think about, and by the way, they were part of the CHIPS Act as well. So they did receive some subsidies there. But, that might encourage them to accelerate production in the United States. Now, how will NVIDIA respond? I don't know. With 74% gross margins, and it seems like insane demand, in Jensen Huang's words, it seems like they're just going to raise prices. So, if we get some tariffs on TSMC, which I wouldn't be surprised, I just think NVIDIA will end up passing that on to its demand-hungry customers.
It feels like you've got some nuance about which horses you should back, but more broadly, the winners are likely to continue winning into the next administration. Is that what you're articulating? Is it still good to be long big tech here?
Let's just talk about a little bit of the winners in semiconductor. At the end of the day, NVIDIA is clearly in pole position, monopoly position. More demand than supply. But competition is coming. Remember, 40% of their data center customers are also trying to compete with them. Amazon's coming pretty close here in developing a chip. Now, I understand it's 40% cheaper. Not really sure the performance benchmarks with respect to training and inference. They haven't been published, and it's not clear it's in production mode, so to speak. So let's see what happens. And of course, to a certain extent, AMD and Intel are fast trying to be competitors as well. So competition is on the way, and we should expect to see more of that. People are looking at the price of NVIDIA chips, the fact that they can't get access and are trying to diversify their supply sources. And that makes sense, right? So we do expect competition to come as we look forward. Now, I don't say this is a Q1. I think NVIDIA should have another blockbuster quarter. Certainly, they were pretty clear about it.
Yeah.
They expect revenues to be up 70% in the next quarter, and they normally beat that number. So let's see where that comes out.
Customers look at the price of the chips. Investors look at the price of the stock. With an NVIDIA trading at 46 times future earnings, many have been perhaps taking a bit of profit. When you're looking at Tesla that's trading at 141 times future earnings, what do you make about the optimism baked into that stock post-election?
Well, Tesla is clearly a special child at the moment. given the relationship between Elon Musk, and Trump, and these stocks, these Magnificent Seven, on average, they're at about 35 times forward earnings at the moment, and that makes them very vulnerable to disappointment, right? So one of the themes that we've had on this year is, tech is fine. We believe in Gen AI, but you need to diversify beyond just those Magnificent Seven technology shares that have fueled the market's advance. And we think mid-cap in particular, trading at about 13, 14 times earnings, up close to 10% already this month, is an excellent beneficiary of MAGA, potentially corporate tax rate cuts, manufacturing renaissance, and a better outlook for growth in the United States. So there are other things you can do and diversify away from tech. By the way, where earnings are expected to decelerate in the so-called Magnificent Seven as we head into 2025, where they're supposed to accelerate in the rest of the market. And so I think that's a really nice way to still earn a return, participate, but protect some of that valuation potential downside risk in tech.